听眼资本本期视频为您带来的是大摩根士丹利在3月20日亚洲闭门会关于汽车行业的月度更新，在瞬息万变的汽车行业洞察印度和中国这样的关键市场动态，绝对能抓住你的眼球。今天的网络研讨会带我们直击印度电动车市场的最新趋势，两轮车渗透率在2025财年升到 6.5%， 贝加、TVS 和 Hero 这些传统厂商的市场份额也在稳步攀升。乘用车这边渗透率稳在 2.5%， 但 Tata 的主导地位正被 MG Motors 挑战。Mahindra 和 Maruti Suzuki 还计划大举扩产，准备在2026财年推出更多新车型，盈利能力也在改善，成本下降和平台升级让前景更乐观。再看中国，汽车市场开年就很热闹，1到2月批发销量涨了 13%， 但零售端偏弱，库存压力有点大。电动车渗透率回升到 49%， 销量猛增，出口更是亮眼。2月乘用车出口增长 11%。 不过车企的财报有点让人失望，尽管收入不错，利润率却拖了后腿。国企这边也在忙着重组、消成本、整合品牌，还等着财报和车展带来新看点。另外 BYD 的新电池技术也很吸睛，充电更快，展现了他们在技术上的领先。不过短期内这还不会掀起市场份额的大洗牌，价格和用户体验仍是关键。想知道这些变化怎么影响汽车行业的未来？接下来的内容会给你答案。接下来是英文会议的全部内容。如果您需要英文原稿和我的投研助理人工校对的中文文本，您可以在频道的 Patreon 上获取。
Good day, everyone. It's March 20th, Thursday. Welcome to Morgan Stanley Asia Auto Monthly Webcast. My name is Tim Shaws, the Greater China Auto Analyst. I'm your moderator for today's call. I'm joined by my colleagues from regional auto teams, Sushant, India Auto Analyst, and also my team member, Joy, who covers the parts and state-owned enterprises car makers. Please note that this event is for Morgan Stanley institutional clients only. If you're a member of the press, please disconnect and reach out separately. For important disclosure, please refer to Morgan Stanley disclosure website, and kindly note that this webcast may be recorded. During the presentation, you can send questions at any time from the Ask a Question tab. For today's call, we will focus on the latest developments on China auto markets and the key takeaway from the team's recent marketing trips, as well as feedback on AutoName's fourth quarter results posted so far. And separately, we also have our Indian auto analysts to share more about the latest EV adoption and the model trends in India. So firstly, looking into India, I think EV sales in India have been experiencing an upward trend over the past few quarters. India's auto industry had modest years the last year, but EV segment has been outperforming substantially with around 25% year increase. So that shows India's accelerating transition to vehicle electrification. Several Indian EV makers covered by our India auto teams bet on electric SUV to boost the market share. And lately, as you may notice, that Mahindra, one of the largest car makers, also launched the sporty BEV6E and the BEV9, the SUV. So my colleague Sushant can share more updates on the major OEMs, the EV strategy leaders. And back to China Autos, it's been a busy earnings season with major car makers and parts makers reporting fourth quarter results. These and the upcoming week. The general takeaway in fourth quarter basically came in is that the result came in slightly short of market expectation, despite robust fourth quarter top line as well as the volume sales. I think the lower margin serve as the key culprit. We also share more details later. So without further ado, let me hand over to Sushant for more update on India autos as well as the latest EV trend. Over to you, Sushant.
Thanks, Tim. So I'll talk about the recent trends in India electric vehicles. I'll break down the discussion in 4 parts. So starting with the two-wheeler side, we've seen an improvement in penetration to about 6.5% in FY25 compared to around 5% levels in FY24. Interestingly, we've seen the market share shifting in the favor of legacy OEMs. So Bajaj, TVS, and Hero had a collective market share of about 32% or so in FY24, which improved to around 44% in FY25. We maintain that EVs will be a key driver of growth in two-wheelers. We expect electric two-wheeler penetration to reach about 9% by FY25. In FY26, a key to watch will be a 50% drop in the demand side subsidy that the government provides. So currently, the government is providing around rupees 10,000 incentive on about a 1,20,000 vehicle, which will be reduced to about 5,000. So that will be a key thing to monitor. The second part is on the passenger vehicle side, where the penetration as such has remained broadly flattish. It's about 2.5% versus around 2.2% last year. We, however, see a meaningful swing in market share trends in passenger vehicles. So Tata, which dominated the BEV market share in FY24 with about 70% market share, its market share fell to around 55% in FY25. And this was driven by a sharp ramp up by MG Motors in its key model Windsor EV. Again, we see a stronger improvement in BEV sales coming in FY26, which brings me to my third part, which is the ramp-up plans of key OEMs. So we see an exciting FY26 for electric PVs in India. As Tim pointed out, M&M has launched 2 premium BEVs, which garnered about 30,000 bookings and an order value of around $1 billion on the first day itself. The average ASP was about 30,000 per unit, about $30,000 per unit. Just as a reference, the average retail price of vehicles in India is about $14,000. Secondly, coming to MSIL, so MSIL is also gearing up for ramp up of its e-Vitara model. So Suzuki plans to make India as the production hub for EVs. So export opportunities coming from that, as well as rebadging of model with Toyota, will collectively support scale for MSIL, which we believe is a key to win in EVs. Coming to Tata, the company is cognizant of its market share losses in the past year and has talked about corrective actions. So incrementally, the company will launch 2 new models over the next 6 months, which is the Harrier EV and the Sierra EV. And it also plans to reposition its mid-size SUV model Curve. So all in all, we think we are set for an exciting FY26 in EVs. The last part is on the profitability side. So we see improving trends in EV profitability, especially in the December quarter. So the key drivers were the structural cost improvements, platform upgrades, and softer battery prices. For example, Bajaj saw a sharp cost reduction coming from its new 3.5 platform. It aims to launch more models on this platform and sees a clear line of sight on EBITDA break-even for electric scooters. Hero also saw similar trends in cost improvements coming from the Vida V2 platform. So all in all, we also see improving profitability for EVs in India. So I'll stop here for questions and pass it over to Tim.
Great. Thank you, Sushant. And we will circle back for further questions about India autos later. So switching gears to China, we would basically just separate up update into a few parts. So firstly, I just want to provide you some quick updates regarding the latest development and vehicle sales, because a couple of days ago, I think we just got the official February sales number. So we noticed that China passenger vehicles, the February sales, they held up very well, thanks to mainly to the resilient export. So if you look at the first 2 months of this year's, the January plus February wholesale retail is now top like a 13% for wholesale and retail up 1% a year. So this basically, just track on schedule to reach our full year forecast, about 3% for wholesale and largely flat for retail. But stronger wholesale number for the first 2 months, and weaker retail means that inventory piling up at the channel level, both locally and globally. So we do expect, although we do expect the volume to gradually recover in March and April into the peak season. And But in the near term, we do think that the rising inventory will likely keep discount and more sizable before the seasonality kicks in. As you notice that, I think over the past few days, both Tesla and major car makers in China, I think they introduced additional promotion and discounts. And for the first 2 months of this year, EV penetration recovered to 49%. So basically, if you look at volume, the EV sales grew 80% of a year to 830,000. So wholesale number for the first 2 months were up like 48%, while retail were up 36%. Inventory has been also rising, but much better versus passenger vehicles. Export, as mentioned, overseas sales was the bright spot for the first 2 months of this year. Passenger vehicle export grew 11% year over year to 350,000 units in February, while year to date, export is now up like 6% of year to 730,000 units. We have 6 million for the full year in our model, so that implies that first 2 months basically account for about 12 to 13% of the total export we have in our model. And if you look at automakers' fourth quarter plans, our key takeaway is that, as mentioned at the beginning of the presentation, expectation has been pretty high. However, most, if not all, the automakers, both the car makers and parts makers, well, their result surprised slightly on the downside. And the key downside surprise was mainly coming from the margin, because top line, the volume sales in fourth quarter apparently was very strong thanks to the stimulus and the pre-buying last year. However, the margin didn't really fully reflect this kind of scale benefit. I think there are a couple major reasons. One is that for the auto parts maker, I think some of them offers more like the one-off discount to secure or lock in some new project into 2025, because all the car maker apparently are under huge pricing pressure. Second major reason is that I think some car makers might prefer to recognize high expenses if they can in fourth quarter, because entering into first quarter, i.e. March quarter this year, is going to be low season. So operating leverage might cause some greater pressures on their profit in first quarter. So if they can recognize some pre-expenses of cost in fourth quarter reasonably, probably they can help them to smooth the profitability, profit volatility into the first quarter. But overall, we still think that the results, after the result, there could be some pressures, as we can notice that the share price of some EV startup pull back after the result. Looking into the upcoming results, I think in the next one people will focus on would be NIO, which will report tomorrow. Basically, I think there's no strong expectation on their bottom line, but the key focus will be attached to their restructuring. Because apparently the company still register a very high burn rate. So the management, I think a couple of days ago, mentioned they are going to have another round of restructuring. So the further details will be highly focused. And in the meantime, the NIO is going to have their facelift in second quarter for their volume driver model, like ET5, ES6. I think this will be another key focus into the result earnings tomorrow. And in addition to that, so next week we are going to have BYD. I think BYD is going to report their fourth quarter result. Fourth quarter would be a very strong and solid quarter thanks to the favorable scale. I think the profit per unit should be improving quarter over quarter. I think market was looking for 10,000 versus 9,300 in the quarter. But the further update on their guidance, i.e. like the volume sales for like a 5.5 million for the full year this year, or any further guidance on the unit profit per car, will be also highly focused. All in all, I think after the result, the focus will be strictly shifted to the new model launches. So starting from March, we are going to have a bunch of new models that come into the market, including iDos, Li Auto, and Xpeng. So I think the new models, the initial feedback and the order intake would be the next catalyst to drive the sector and the individual stocks the performance. So that's some quick updates on the EV side. And now I hand over to my teammate, Joy, to talk more about SOE.
Sure. Thanks, Tim. So we have been published a couple of reports on SOE reform theme. So basically, the market share losses and deteriorating profitability in the past couple of years have, triggered the urgency for major restructure and reform. Despite of share volatility in the past few months, driven mainly by the fund flows. But if we look at fundamental, we have seen steady efforts taken by both OEM themselves and policymakers, including the proposed parent co restructure of Dongfeng and Chang'an, as well as some operational improvement efforts such as consolidation of local brands to cut costs, as well as production capacity optimization for joint venture brands such as under SOE names Shanghai Auto and Guangzhou Auto. So those are all, I guess, fundamentally speaking, we have seen these steady moves, to help them to do restructure. At current stage, we have to admit that stability of operational improvement trajectory, profit is there. So be more of an off semantic on SOE reform, but we would like to, I guess, highlight some potential triggers or catalysts for the market to shift a little bit of more focus on these SOE OEM names. I guess first of all, the upcoming results. So, as company will likely provide some additional information or updates regarding to the internal restructure, such as with respect to streamlining the product lineup, cost cuts and concentration their focus to a limited number of key products instead of, launching a lot of new products and dilute their focus. I think these new initiatives announcement will to a certain extent trigger the market to shift back a little bit of their focus or fund flow to the SOEs. And another thing about this upcoming results is that for specifically for Shanghai Auto and Guangzhou Auto, it will be the first time for their respective new management to provide detailed operational plan for the first time since they took office. Shanghai Auto just changed management mid last year, and Guangzhou Auto the beginning of this year. So this is their first time, in the spotlight to provide some detailed guidance in the future. So likely it will draw more attention from the capital market. And also another thing we want to highlight is, further announcement of the parent co restructure of Dongfeng and Chang'an respectively. Although, to be frank, it could be very difficult to time the event because so far the only official announcement we got is both Lifco has reported that their parent co is under some kind of restructure, but it's pretty hard for the market or for us to really time the event. But overall, during our conversation with the company, basically they indicated that the high-level plan shouldn't take too long to finalize. So likely within a couple of months. So I think the risk reward seems a bit of attractive because this is not like 1 year or 2 year horizon. It's more of a couple of months or before the mid-year. So this restructure of their parent co and potential implication on the parent co will not only have implication on Dongfeng and Chang'an specifically, for their respective businesses, but also more broadly to the industry, I guess to the rest of the SOE OEMs regarding to the applicable restructure methodologies going into the future, provide some general guidance on how SOE is going to reform, how SOE is going to, what kind of policy support they're going to have from a higher level. So I think that should definitely be something we need to watch for. And lastly, the auto show. This year is Shanghai Auto Show, and it's the home court of Shanghai Auto. So and I guess we could expect some catalysts such as management interviews or management guidance on their restructure and etc. So I think definitely the Shanghai Auto Show will be some kind of not only a catalyst to the whole market, but also specifically for Shanghai Auto. So with that, I'll hand it back to Tim.
Thank you, Joy. Now we are happy to take more questions from investor online. So I think the first question is for Sushil. So Sushil, about the EV adoptions and the upcoming catalysts, could you please share which upcoming model we should pay attention to in the following quarters? Because you mentioned that I think there will definitely be a lot of car makers responding to a very successful launch from Mahindra B9. So which model we should focus on in the upcoming quarters? Thank you.
Thanks, Tim. So a lot of companies, starting from Maruti to Hyundai India, have showcased their models in this year's auto show. Their deliveries will start in probably in this month to a couple of months down the line. Largely, the price point is around that $25,000 or so. So the key to focus will be Maruti's e-Vitara, Hyundai's Creta EV. There are also new model launches coming from MG. So the Windsor EV was a big success, which actually impacted Tata's market share. MG has said that it will launch one model every quarter in India. So the next one coming is the M9 MPV, which is probably at a higher price point, but that should also be a key to watch. On Tata Motors, they will be launching the Harrier EV in the next few months, and Sierra EV about 6 months down the line. So these models, along with the repositioning of its curve, will be a key to watch going ahead.
Great. Thank you, Sushil. And the next question is for Joy. I think investor noticed that Dongfeng Motor stock was up a lot today. So I think currently it's up 8.8% and was over 10%. So does that mean that we're going to see more material progress in the restructuring you just shared?
Well, the short answer is not directly. So, I mean, for today's rally, I think, the news I read is more of, there's a local broker, published a report on Dongfeng and comment on the potential restructure and, trigger some speculation on further progress of this restructure. But, for me, myself, I haven't heard any solid progress on that front. But, as the question, asked, does it have direct implication? I do not think so. But, however, I think going into the earnings season, the company will host a conference call next week. So the company will report full-year result and conference call next week. So I guess more or less the market will expect some kind of comments on Dongfeng's parent co restructure. So I think that will be some kind of catalyst that the market is betting on. So yeah, I think the risk reward seems a little bit attractive at this point going into the earnings season. But for the restructure itself, I don't think there's too many discussions on that front, because recall that before this restructure being announced, there's no discussion on that perspective. It's been a rumor for like 10 years, but this is some kind of surprise, because I've been talking to the related companies, so no one actually heard anything about this surprise before. So basically, they heard this news on the February 8th, and the Listco published the report to inform the shareholders on the 9th, and then on the 10th, they sent people to Beijing to discuss on the details. So I think if something happens, it will be some kind of a surprise to the market. But back to the question, I think timing-wise, it seems more a more attractive risk reward. Yeah.
Thank you, Joy. So the next question is about BYD's the batteries. The investors, the clients want to ask about the comment on BYD's new batteries, and is this game changers? And EV cars using CATL and the GD's batteries are at a competitive disadvantage because of this. Will this shift the market share significantly? Yeah, thanks for the question. I think in short, we don't expect the battery technology or the launch of battery technology to trigger any dramatic market share reshuffle in the near terms. It's definitely important strategically because it can definitely manifest BYD's the leadership as a battery or charging the technology innovator. But on the other hand, when you think about the vehicle cells, to be honest, I think the battery charging speed is important, but it's not that important. If you think about the mainstream or flagship models launched by the players who source from CATL or GD these days, basically for 800 voltage or 5C batteries, you can charge your battery probably by 70 to 80% capacity within like 10 minutes. So the question is that how much you are willing or going to pay for another 4 to 5 minutes. And the other thing is that pricing is still the key to vehicle purchases. So when we mention pricing here, we're talking about the vehicle prices. So the new system debuted by BYD will put on as Hanel and Tanel models. I think the delivery will start in April. Currently, based on their announcement, pre-order prices will start from 270,000 RMB or 37,000 US dollar. So I think the key is that they're willing to cut the prices further when they officially launch the models, and what would be the response from others. So overall, we are very constructive about the technology breakthrough for both the autonomous driving and the charging, because we think it's going to be the key to further advance the EV adoption from now around 50% to more than 70% in the next 3 to 5 years. But in the near term, we don't think that will cause a dramatic volume share reshuffle. Just to quote for the replies or the comment from one of our clients or the investor, they mentioned that this kind of supercharging technology at the moment is definitely fancy and good to have to show your friends, but not a must-have unless it can get it cheaper and more user-friendly. So that's some brief updates regarding the questions. So in the interest of time, we need to conclude our call today here. And kind of notice that we host this monthly call, Asia Auto Webcast, every month at 3:30 p.m. Hong Kong time or 4:30 p.m. the Japan Korean time. The team is looking forward to having you again soon, and thank you very much for taking the time to join us today. We'll conclude the presentation here. Thank you.